Now, Prudential reported better than expected results earlier this morning, but the company is still operating in the wake of its failed bid for AIA in Asia, which cost £284 million. So which way now for Prudential? Well, I am joined for his view by James Bevan, investment manager at CCLA. James, welcome this morning. Prudential, after all their problems, have kept investors happy, haven't they?
Well, they came out with excellent results. They upped the dividend in line with expectations, and they said comforting things about future strategy. And in a sense, it was the future strategy comments that we were all very worried about.
What else is happening now? The whole focus really is Asia, isn't it? Because we actually heard the CEO come out and tell us that Asia was where the growth was. And yet, of course, the jewel in the crown that they had planned for Asia didn't happen.
Well, except as far as they delivered double-digit gains in sales in every market in which they operate other than Korea. And actually, the comments that accompanied the apparent lack of success in Korea were really important for shareholders. This was about putting value ahead of volume, which you know has been a cri de coeur for the company overall, and certainly has played out in the UK. To find that they are actually very focused on value rather than simply being bigger is really important.
Yes, indeed. Now, where does this company go from here? Because we've had an awful lot of negative chat about the CEO, about the chairman. Are they able, after these great results, to actually rebuild trust? Because they need the trust of the shareholders to go forward, don't they?
I think this is a really credible and competent management team, and I don't think that we should kick management out because of a hiccup, a big hiccup, undoubtedly, in the context of the company's management. But nevertheless, a chapter that I suspect is now past. The real challenge, I think, from here is, first of all, growing the business organically, and of course there will be some tension in the region because there will be lots of people who want to play the game, and the Pru is going to have to up its ante in order to ensure that it gets more market share.
Yes, and we've had Mark Tucker arriving into the picture, and presumably he wants to exercise some power and have a bigger slice of that pie.
Well, I think he may well try and seduce some of the generals at the Pru to come with him and to move, and they will have to think very carefully about what their retention strategy looks like without having to put too much money on the table to keep the staff. That said, the market itself is growing very substantially. There's lots of room for everybody. The other key thing, I think, which shareholders need to focus on in terms of Pru's results and way forward is the way that they are managing margins. This is not just a question of how much they sell, but what sort of business mix they are selling. And what they have done well, both in the States and in the UK, which are relatively speaking ex-growth compared with Asia, is ensure that they have sold more product with higher margins, so variable annuities in the States, annuities with profits over here. Sales numbers, which themselves are not great, but where margins are big, so profits are substantial. So
really, in the more developed markets, it's about being clever with what you sell rather than just getting the quantity.
Absolutely right. Learning from the mistakes of prior generations of management that, in a sense, pushed volume for volume's sake, bigger being better. Now we're looking at more shareholder value being better, and I think it's so important, and played out in terms of the capacity to pay the dividend increase that everybody was hoping for, while still admitting there was a substantial black hole on the back of the costs of the aborted bid.
OK, thank you very much indeed for joining us. We'll obviously be taking a very close eye on what happens with Prudential and the management team there. Thank you.